From Kansas State University, this is Agriculture Today. Eric Atkinson here. Here's what's ahead. K-State's Dan O'Brien on the grain markets. He'll talk about what's behind the latest surge in soybean prices and how the battle for acres between the corn and soybean markets may already be heating up. He'll also look at what the unsettled situation in the Black Sea region means to the corn and wheat markets. Also, K-State's Dorivar Ruiz-Diaz is back to pass along some of the management strategies for row crop fertilization that he's discussing with producers at recent K-State crop production workshops around the state. Among other things, he'll outline the situation where a producer might actually be able to skip phosphorus applications this year. And later, K-State's Chip Redmond on Kansas agricultural weather. Here on Agriculture Today. This is Agriculture Today, and we're glad to have you aboard here for our Friday edition. The grain markets of interest, of course, and we'll talk of what's been going on that front this past week. Dan O'Brien, grain market economist, K-State Research and Extension, from his office in Colby, northwest Kansas. Dan, you, though, have been on the road quite a bit since we last talked at various grain marketing workshops around Kansas, one of which took place in the central part of the state this past week, and it focused on soybeans. Bringing that up because the hot market of choice this week is, in fact, the bean trade.
Making contract highs for the March 2022 contract. Chartists pay close attention to where high prices had been in the past. And here back in late May, early June, we got up to just under 1448, thereabouts, 1446. And we beat that here actually on yesterday's close. So, and as we closed in soybeans at 1448 and a quarter. So pretty strong markets, really questions of where all this goes. A combination of factors such as dry conditions in South America, Argentina, Brazil, Paraguay, and actually Paraguay has a larger percentage hit based on the USDA numbers than even those other two. So I guess that those issues, the issue of weaker competitive position from export competitors in terms of just available supplies on the one hand, and add into that questions about soybean acreage, soybean and corn acreage, with really vacillation, I guess is a nice polite word to say, for people going back and forth guessing from various private sources what acreage of corn and soybeans will be. Initially, without even blinking, we were looking at expectations of, say, 3+ billion acres to be planted this year. Now you've had some other farmer-based surveys, Farm Futures, et cetera, that have moderated that a little bit. It is quite the question to ask if we are going to plant lots and lots of soybeans, and why did we have this big battle over fertilizer prices for corn and other feed grains? So I did at these meetings follow Dorivar Ruiz as he gave his presentation. I dare say his presentation was more important than mine, as he was dealing with these fertilizer challenges. And as an economist, I look at things from a marginal benefit and marginal gain point of view. And even if people were able to get enough high-priced nitrogen fertilizer for their corn to plant to their recommendations, what's lost now, I think, will be any normal 5 or 10% excess factor that people had that positioned them for, hey, maybe tremendous weather would come along and we get more yields. And a lot of disagreement amongst people in Kansas as to whether folks are caught short on their fertilizer or not. Did they get adequate supplies and had already put that in the ground in the fall, or did people step back and decide they weren't going to pay those high prices and re-enter that market in the spring? And just a surprising amount of disagreement as to what actually happened. We actually need a survey on that, but if we did, nobody would probably answer it because of neighborly considerations and all of that. So what a challenging situation. And you can bet that, yes, I'm thankful people listened to some of what I had to say, but they were glued to what Dorivar was talking about as he was looking at nitrogen, phosphorus, and how to survive this year in the time of just extreme high fertilizer prices.
And in fact, later on in the broadcast following our visit, Dorivar will be Mike's side to talk fertilizer strategy with us and some of the things he expressed at that workshop earlier in the week. The corn side, as far as the trade this past week, well, give and take, it faltered a bit, did prices, but there are some positives within all of that market, and one of those is how corn is being priced at our ethanol markets here in the state of Kansas. Those are quite strong, you say.
The strongest in the United States. We have, based on the report for Thursday, January the 27th, that the range of prices at Kansas ethanol plants was $6.42 to $6.69. And on the high end, the next highest state was Nebraska at low of $6.07, $6.57. Some other states, Missouri also at $6.22, $6.62. So it seems like that between Kansas and Missouri, that we over time have been having some pretty strong ethanol plant numbers. But I wouldn't say we're in the center of the ethanol world at all. No, that's up in Iowa and Illinois and Minnesota, southern Minnesota. And you're looking at prices in Iowa running from a low of $5.92 up to $6.41. And we also have the strongest DDG prices in the country. And now, if you're a livestock feeder, you may not be that happy about that situation, but yet we have that strong a demand is where that comes about, given our feedlot sector. Dry 10% distillers grains had a price range of $230 to $275. The next highest numbers on the high side were, I think, $249 on the high end in Missouri and $235 in Nebraska again. So anyways, general indications that Kansas ethanol plants are still functioning, still going forward. There's some worries about accumulation of stocks and some slowdown in the profitability in those plants, and that's no doubt true. But at least as we look in our neck of the woods around Kansas, we're just by indication of what plants are willing to pay for corn and what they're selling their byproducts at. There's still a pretty strong, hot, healthy demand going on around in our state.
And you note in your write-up this week on the markets that there's reason for bullishness long-term in the corn export trade. Yes.
The problems that we are seeing in the soybean market in South America, well, they're continuing, and they're rolling over from soybeans over to corn with at least questions about what will happen there. And it shouldn't be forgotten that as Russia and Ukraine have their issues that they're potentially in conflict over, or at least throwing a lot of dust in the air, that China has gotten an awful lot of its corn from Ukraine. So what an interesting dynamic. Here you have China having built solid trade ties with Ukraine in an effort to not be so dependent on the United States and some other suppliers, or at least to diversify their supply base for their imports. So you have that happening at the same time. You have this move on the part of Russia to exert some control. I hope I'm not saying that wrongly, over Ukraine. So what a challenging situation. Of course, the politicians are involved. They have public statements one way or the other, and diplomats being recalled and all manner of issues. But the big point is that if you look at the wheat market, anything that happens in the Black Sea area that disrupts trade is a big deal for wheat, and it's part of the reason why we're seeing on a down day a close of 793.5, and that's on a down day, down 22 cents for hard red winter wheat, and it just shows the strength we've been having in that market. So you have that part of that international equation, and still questions of where U.S. trade is going. We just add a couple things. The pace of corn exports has jumped, partly because of these same issues. We had a week ending the 20th of January at 56.6 million bushels, and that's actually ahead of the pace for about one of the first one or two times that for these weekly numbers that we've been watching, ahead of the pace to actually meet the USDA's projections. So that's a big deal. You're looking at potentially tighter ending stocks if that sustains. For soybeans, 59 million bushels a week, and need a pace of 23 some to meet the USDA's projections. So that looks like it's going pretty well. On the wheat side, you had for all U.S. wheat, exports of about 13 million bushels. We need actually 21 to meet the USDA's projections. So that's the conundrum of wheat. The prices are wonderful, but the export pace is okay. I would add for hard red winter wheat, where we're at in our part of the country, 4.8 million bushels this week. We need a pace, by my calculations, of about 9.2 to meet the USDA's projections. So you've got a strong but risky market. Strong in the wheat based on international worries and concerns, but the actual underlying performance is okay. But we'll have to pick it up to actually meet the promise of the market.
And just a quick final thought on wheat. Out your way, it did snow this week. As we'll hear later, though, from K-State's Chip Redmond, the moisture relief realized from those hefty snows may not be all that much. So the market needs to perhaps take that into account as it factors in that development.
I'll say this: it may not have been much, but it's better than dry blowing dirt.
Right.
I haven't heard one farmer that was complaining about having the moisture. So I'm sorry, Eric. I guess I turned local for that one moment. My office is in Colby, and they did get a lot more snow in the Scott City area, more the west central part of the state, than we got to the north. So, every bit of it's welcome. I never heard anybody complaining about scooping snow on this one.
Be not misled, folks. That was a very welcome moisture event for Kansas out in the western part of the state earlier this week. Dan's notes on the grain markets can be found, as always, each week at agmanager.info. Gets into greater detail on the market trends, what's driving those. agmanager.info. Dan, until we talk next Friday, many thanks to you.
Thanks, Eric. Take care.
He's with us each week is Dan O'Brien, grain market economist, K-State, Research and Extension. After this break, that conversation with K-State's Dorivar Ruiz-Diaz on approaches to crop fertility management, things he's been talking up at K-State meetings around the state of late. That's next here on Agriculture Today. We're back now on this Agriculture Today and into a topic that will not end as we consider the upcoming cropping season and the high fertilizer prices that you producers will likely continue to navigate as you plan out your nutrient programs for the upcoming crops. Dorivar Ruiz-Diaz, as you know, is a crop nutrient specialist with K-State Research and Extension, and the interest in finding more efficient ways of using nitrogen will be around for a while, it seems, Dorivar.
Yes, Eric, and when it comes to nitrogen, one of the things that we often talk about is that maximum yield and the rates of nitrogen that we need for that. But one thing that I would like to emphasize a little more and actually becomes more important this year is the economic optimum rate of that nitrogen. And so there's been a lot of questions this year. Obviously, the question is, can we cut back on nitrogen rates and by how much? And that's a fair question. And if we think about the economic optimum nitrogen rates is usually lower than the maximum agronomic rates. And that's one thing that we need to be clear about that. The maximum agronomic rates, basically assuming that nitrogen is free, is basically unlimited, you're going after that maximum. Now, the economic optimum basically is lower, and how much lower depends on the price of nitrogen compared to corn or grain in general. So if we look at historic numbers and if we assume that the nitrogen program that the producer's been doing over the years is very close to that economic optimum, obviously the nitrogen price is much higher this year, and that ratio of nitrogen to corn is obviously much lower. In other words, you can buy fewer pounds of nitrogen with 1 bushel of corn. And so that's one key component that we need to keep in mind. And so with more expensive fertilizer, the economic optimum is lower, okay? And so that means we basically, yes, we do need to think about cutting back nitrogen in general. Now, the big question is cutting back by how much? Right. And I think that's where we have a lot of discussions. And if we look at that comparison of the historical values versus the prices we have this year, the economic optimum nitrogen basically come back somewhere around 15 to 20 pounds lower in corn, okay? And that's going to be somewhere around 10% or so. That's a realistic number. And one thing I want to emphasize here is that the amount that we're cutting back is not huge. And that's something very important to keep in mind in this case. Again, no more than 10% is what we're talking about. And I want to emphasize this because I get questions where, producers are thinking of being very aggressive when it comes to cutting back nitrogen. The problem with that is that very quickly we start seeing a significant impact on return to that nitrogen. And so basically, again, the net return will suffer quite significantly if we cut back nitrogen by too much. And that's one of the challenges. In other words, corn, similar for wheat and milo, of course, still very responsive to nitrogen, and the return to that investment is quite significant. And so again, realistically, cutting back, we probably should be no more than 10% based on the price compared to historic values.
So look at your typical application rates, consider that 10% cutback as your benchmark and no more to keep the maximum economic returns in play. But while we're talking about nitrogen, what about other management tactics here? For example, the use of additives and those inhibitor products to keep the losses of nitrogen in the field to a minimum.
That's another common question, Eric, and certainly there are opportunities there. The key with inhibitors and additives in general in nitrogen is that we have to put it where it's needed, and that's really the big challenge. Okay, things like urease inhibitors that works very well if we are using urea in particular. Also, we get some benefit with UAN. Obviously, placement is a big factor here. If we have urea sitting on the surface and subject to volatilization, that's one alternative. Nitrification inhibitors have been around for a long time. There are also opportunities there. But again, in this case, really something that's going to be more useful for, wetter parts of the state, eastern part of the state where we have potential for leaching, denitrification, and so on. We have to evaluate every situation separately and really assess the potential for nitrogen losses. And this is very important because otherwise we're basically adding another cost that we don't need. And that's actually, we are making things worse. So if we don't need some of these additives, obviously, we don't need to apply. One thing I want to emphasize here, and maybe to me is even more important when it comes to nitrogen management, we talk a little bit about cutting rates. We shouldn't really cut too much, as we mentioned. We talk about additives. But the third option where we actually see the most benefit is trying to improve efficiency for nitrogen management. And we've done some studies the last couple of years looking at different strategies, comparing different methods, things like, broadcast pre-plant versus injected, and just different combinations of sources and placement. And that gives us an idea of how we can improve efficiency and how much we benefit from that improved efficiency. And I encourage producers to look at that more closely, especially those thinking about cutting back on rates. My first question is, how are we putting that nitrogen? Is that perhaps a broadcast? Is there a way that maybe we can do a better job injecting that nitrogen, split application? Obviously, people doing fertigation can spoon feed that nitrogen. All of that is contributing to efficiency. And the data we have from the last couple of years is that it's very clear. Some systems tend to be higher efficiency. In other words, we are getting more bushels for every pound of nitrogen that we apply. And that basically goes back to that return to investment. That aspect can be quite significant, even more so than other aspects when it comes to cutting rates or even additives. And so that is one thing that I will definitely invite producers to take a look at their programs and just see where there may be some opportunities.
One would sensibly think here that in these circumstances, variable rate applications would be of benefit in the efficiency cause here.
Yes, that's another factor, Eric, and variable rate has been really something that can be beneficial for nitrogen, but this maybe bring another nutrient that is a key, which is phosphorus. And when we're talking about immobile nutrients like phosphorus, variable rate becomes even more important because obviously we do have variability within the field. There's actually some situations where, in the case of phosphorus, some producers that have been basically building up soil tests and keeping it a little bit on that higher soil test range, there are opportunities this year to actually make some money. And essentially, again, grain prices are good. And if we don't need to apply phosphorus in some of those high soil test situations, obviously it looks pretty good in a year like this. And so that's something to keep in mind. Again, that obviously goes back to soil tests. We basically have two situations. One situation is a load testing situation where we need to apply phosphorus. And the other one is, again, soil test where it's, again, higher than the critical value. Typically, we're talking many producers maybe in that range of about 30 or 35 part per million soil test MELIC. That kind of situations, we don't have to do necessarily an application this year, okay? Not doing any application, maybe think a little bit about starter only, and certainly give us flexibility with the cash flow situation this year.
It's a bold step, though, for producers to completely skip on phosphorus in 1 year, but that may be merited if the soil test indicates.
Absolutely. That's a very good point, Eric, especially those producers who's been used to, just putting back whatever they are taking and keeping that soil test above optimum. It is a difficult decision because also we don't want to fall behind and have problems later. And so this brings the point of if we skip application this year, how much impact we may have in soil tests.
If one is committed to a build and maintain program in particular?
Yes, if we already have a high soil test level and we say, okay, we want to use that extra phosphorus that we have in the soil this year and maybe come back to our regular program this year, what can we expect in terms of drop of soil tests? And the key point here is that, yes, if we're not putting phosphorus, soil test is going to drop. No question about that. Now, what is going to be the impact is the main question. And I think we need to really pay attention to the yield levels and removal of phosphorus that we have with that yield. If we put a situation, for example, of 200 bushel corn, that's going to remove somewhere around 65 pounds of P2O5. That 65 pounds of P2O5 that we are removing, that can drop the soil test somewhere around 2 to 3 part per million in 1 year. So 2 or 3 part per million soil test P, if we are high already, we can afford to do that for a year, maybe even 2 years in some cases. Obviously, long term, that's not a good idea. And so we have to come back at some point and put enough phosphorus to maintain that soil test level. But again, in the short term where we are today, those producers who's been building up soil tests, they're basically been doing it for this reason, to have basically the flexibility to skip 1 year. Now, on the flip side, producers who's been, essentially putting just sufficiency and maintaining soil tests on the low side, they don't have the flexibility. And now the question for that producer is at what point phosphorus fertilizer basically pays off. We've done some analysis for that situation, and what we found is that if soil test phosphorus is low, we do see a consistent yield response, and we have to be very careful not to cut back on rates if we are low on soil test.
You've given us several things to chew on in this conversation, and there'll be more discussion about this topic undoubtedly as we roll toward another crop production season here in Kansas. Dorivar, thank you for coming over and passing this along.
Thank you.
Crop nutrient specialist Dorivar Ruiz-Diaz, K-State Research and Extension, contemplating approaches to crop fertilization given the astronomical fertilizer prices that remain on the market. This is Agriculture Today, and we'll be back with more for you shortly on the K-State Radio Network. Now for you on Agriculture Today, Kansas agricultural weather and quite a weather event in far western Kansas we want to talk of today as we're in touch once more with K-State Research and Extension meteorologist Chip Redmond, referring there, Chip, to the snowfall in parts of western Kansas on Tuesday into Tuesday evening. To say impressive totals would be an understatement, at least in certain locations.
Yeah, it was quite the event. I think most forecasts going into it were for 6, maybe 7 inches of snow, and they outperformed that by well over triple that. So, yeah, Mount Sunflower there with the pretty impressive social media photo of 27 inches. Probably the most interesting thing out of the whole event was the fact that there was no wind. It fell straight down, and for a western Kansas snowstorm, that is a rarity. No. Unfortunately, there wasn't a whole lot of moisture in that snow. It was dry, fluffy snow, and we were looking at snow-to-liquid ratios of 30 inches of snow to an inch of moisture.
Wow.
So they're not – you would think 27 inches would be quite a bit of moisture, but it's going to come out to be, I'm going to guess in that area, a little bit over 3/4 to approaching an inch.
Well, it's better than nothing, but it's hardly going to be enough to quench the droughty conditions in those areas then. As for the drought monitor we do have in hand, issued here earlier this week, it surely is reminding us how dry it is out there.
Yeah, and keep in mind this drought monitor did not include, the cutoff is about 7 a.m. on Tuesday, so it did not include that snow event. So there were degradations in drought conditions across a lot of the state in isolated areas, lots of tweaking. Abnormally dry conditions got expanded into Woodson County and other areas of the Flint Hills. And then we saw moderate drought expand in north central Kansas, as well as parts of the far northwest and south and west all saw some degradation in severe drought as well.
Before we talk of the prospects for more widespread moisture, though, next week, you're hinting, our temperatures have been on something of a roller coaster of late. We've had days where it's comparatively mild for this time of the year, and then back into sharp cold temperatures and winds accompanying those. And this pattern seems to be entrenched, Chip.
Yeah, cold front every few days has definitely been the pattern, with warm air advection and warmer temperatures ahead of the cold front. Our average temperatures this year across much of the state is somewhere around the 40-degree mark to the mid to upper teens for lows. We're averaging around 10 to 15 degrees above normal for several days, and then we average 10 to 15, sometimes below normal, we saw last week. And that averages out to, well, average. So I wouldn't say it's been abnormal to see these temperature swings with an active weather pattern that we've seen with periodic cold fronts every few days. It's to be expected for this time of year.
Well, then, as we look at that outlook for next week, you say there's a hint of precipitation. To what extent?
Yeah, there's a pretty substantial storm system forecasted to impact the central U.S. midweek next week. It does look like there's going to be elements of wind as well as some warm air out ahead of it, which is what we're going to start to see this weekend, and then cold air behind it. That clash of warm air and cold air is going to be occupied by, it looks like, some moisture. Well, will that be rain? Will it be snow? Depending on where you're at and where the storm tracks. But right now, the National Weather Service is forecasting around half an inch of moisture for practically the eastern half of the state, and then a quarter to a tenth of an inch for the western half. So there's definitely some uncertainty in there, but a good shot of moisture is possible with higher confidence in the eastern part of the state by midweek next week.
Well, we'll take what comes and look forward to that widespread moisture event coming in midweek to late next week. Chip, as always, thanks for the update. We appreciate it.
Yep, thanks for having me.
He's Chip Redmond, meteorologist, K-State Research and Extension, on Kansas Agricultural Weather. That's our time for today and the week. A good weekend to you. Eric Atkinson here for Agriculture Today over the K-State Radio Network.